Hello everyone, welcome to video 3 of the first module in which we will talk about the importance of stop losses. Now, I've been trading for about 8 years now, and I couldn't tell you how many people simply do not use stop losses still in this day and age. And it's one of the worst mistakes you can make as a trader, as it could lead to a severe loss on your account or a blown account or blown challenges, blown funded accounts, whatever you have currently. It could lead to detriment on your account if you do not use stop losses. So stop losses help you to say if a price goes against your trade, you want to cut your losses at a certain point to get you out of that trade to prevent any further loss on that particular trade. So this is really, really crucial. This is something that I would have to have in my trading at all times. This is why martingale type of strategies simply just don't work, because they don't have stop losses. Martingale is essentially adding to a losing position until price reverses. But the question becomes, what if it doesn't reverse? Then you could see a blown account and potentially a lot more. So definitely use a stop loss for every single trade that you place that allows you to live to see another day if the trade doesn't go your way. All right, so again, we're on AUD CAD. This is just a currency pair that I have pulled up here. Let's just say that I were to place a buy position at this current price point and it goes against me. Well, the reason why we need stop losses is, let's just say it keeps going against you and goes against you. Well, the psychology of a trader says that if I don't have a stop loss and price keeps pushing against me, well, it's bound to just reverse and go in my direction at some point, right? So you keep holding, any little bit of a pullback, you get excited because it may go in your direction, and then it keeps falling against you. So you keep having that hope that it's going to come back up into profit. Another thing is, a lot of traders have the fear of losing money. So when they're in a loss, they don't like to realize that loss. I mean, they don't like to close that trade in a loss, and they would rather keep holding that trade in further loss with the hopes that price will come back to their original level that they sold or bought it from and continue into profit. And that's the worst type of mindset to have in trading, because that will lead potentially to a trade that just keeps going against you. So the thing about professional traders is that they're not always right. You will lose trades. I lose trades. Professionals lose trades. I mean, you name it. Every single trader on the face of the earth has lost a trade at some point. But what makes the difference between a professional trader and a non-professional trader is that non-professional traders get emotional. They want to win 100% of the time, and that's just not the reality of trading. Professional traders, on the other hand, know that losses are part of the game. So what they do is they understand that stop losses are required and that they will lose trades on occasion, and they just take it on the chin and keep going with their trading plan. So that's why it's so important to have a stop loss, because you could lose a trade, but heck, let's just say you risk 1%, you lost 1% of your account. So what? Shrug it off, move on, and keep going, because the next trade could be a winner and you could make 3% on that trade. Right? In the previous video about risk and return, we talked about, for me at least, having that rule of thumb, at least a 1 to 3 risk to reward, meaning risking 1% to at least make 3%. That means if I were to lose 2 trades in a row at 1%, I've lost 2%, but the next trade could be a 3% win. Well, 3% minus the 2% loss is a 1% gain. But I've only won 1 out of 3 trades, meaning 33% win rate. So the higher risk to reward you have, the more trades that you could possibly lose and still make money. Right, so that is why it's always good to think about the long-term perspective here and know that losses are imminent and will happen to you at some point. But to stay in the game the longest, we need to have a long-term mentality and not a short-term mentality, because the short-term mentality says I have to win every trade. But eventually that will lead to a blown account, because you will continue to hold a losing trade, and that price could continue to push against you for a very long time, leading to that blown account. The long-term trader says, I will lose, let's put a stop loss. If I lose, oh well, let's keep going and move on to the next trade. If I win, great. And that is how having a stop loss is so important, and that will lead to many, many more past challenges for you guys and many, many payouts for you guys, because you're doing it the right way.